Good morning, everyone. We're back here in Investagrams, and let's take a look at what's happening in the PSEi. So far, our previous anticipation of the breakout of 8,000 didn't work here, right? So you can see a short-term triple top. So that really means that the market is having a hard time to take out 8,000, 8,1. There's not enough catalyst to sustain trading above these levels. So the market is telling us something that, hey, the bears are winning. There's more focus on the negative catalyst, not just probably in the Philippines, but more of the macro aspect in the global scene. Like with the coming trade war of US, China, that's gonna ripple effect to other countries, emerging countries such as the Philippines. So that's one challenge. So after this third sign of weakness, that's already a warning sign for us that the bullish scenario didn't work at the 8,081 level, right? So now we placed our stops below 7.8 in our previous discussions. And if you respected those stops, we've already saved ourselves initial downside of 4% on the index. But 2.5% because it's recovering. So now, what do we expect out of the PSEi? We're seeing initial support levels at around the 7.4 area, and mainly the BSP has announced rate cuts and also reserve ratio cuts. So I think that would give us a short-term boost in the market. But then again, you have to look at the big picture. Are these short-term cuts or short-term solutions good enough to really sustain the PSEi above 8,000? At this point, I don't think so. So my main approach here would be, if you're able to capture any bounce or any dips at 7.4, 7.5, now that we're recovering, we're seeing an engulfing candle here. Then mainly for me, it's sell on rally on 7.8, and if ever there's an overshoot of optimism, then we could sell more on the spike 7.9 to 8,000. But if you're playing it conservatively, I think this is just a simple retest of the breakdown. So most likely your upside is gonna be capped to 7.8, 8,000. So how would I approach things going from here? So one way would be, you can buy previous leaders or stable companies that have went back to its basis. So example, SM Prime. You can see it went back to the support near 37. So if you want this company, you've seen its fundamentals, you could try to accumulate here. And maybe it would give us a simple swing scenario where your reward can go to 40, 41, depending on how bullish the market turns. Okay? Or you could really find some outlier plays. Example Holcim. This company recently announced being acquired by San Miguel, right? So mainly the story is over already at this period, the day of the announcement. And I think it was announced that the valuation that SMC acquired Holcim is around 1670 or 1650 to 1680 per share. So based on that benchmark, you can see that, example, from the 16 top, or let's say in the closing bodies, you could see that we still have an 8% to 10% upside if you buy it at 15. But the problem is mainly the market reacts in advance, right? So now that the buyout has been announced, then there's not much excitement to the stock anymore. And the next step for this would be its tender offer. So after SMC acquires 85% of Holcim, for the rest of the 15 to 14% of the shares, they're gonna try to buy it from the public via a tender offer. So if they bought Holcim at around 1650s, to be conservative, right? So there's a chance that they would also bid up the current the prices if the tender offer gets approved at 16. But there's also a chance that, hey, since they've acquired majority at 85%, they may also settle for a tender offer that's lower. So we're not, that's the risk that we're taking here. Okay, so there's a chance that if the management is quite shrewd or smart, they can also just bid on a lower price, but that wouldn't guarantee them eating up the shares on the tender offer. So I'm just telling you the scenario. So right now it went back to the base. So but technically, to make things simple without the fundamental info, we're back in the base here. So as long as 1350 to 14 holds, then we can have an easy swing trade if it recovers or if there's new developments back on the tender or other developments regarding the acquisition. So there's that chance that this can go up again. Okay, so that's for Holcim. So you can also look at, since we're talking about reserve ratios being trimmed down, meaning banks would have more capital to lend, and that would go around the economy, or they can invest the new flow of money. So you could also look at property names being the leading sector. So take a look at property. It just corrected a bit, went back to the previous breakout points, but again, when the BSP cuts rates and reserve ratios get trimmed down, there's new flow of capital. One of the main beneficiaries would be the property sector. So I think this is one interesting name to look at. So besides SM Prime, there's names like Ali, Megaworld, or if you're a bit more radical, you could search for other more quiet, non-mainstream property names that may have potential. Okay, what to avoid? I think moving forward, since we're not in a very bullish market, the market wouldn't give that much attention to expensive names already. So previously expensive consumer names that are trading around 30 times or above, if any of these companies have disappointments in their earnings, then that's a big blow to them. So example, Jollibee being an outlier, it was previously strong, reaching 300, 320. But then after breaking down below 306 and 300, the tone suddenly shifted. So you need to be aware of these kinds of moves. That a stock can be a previous leader, but then if there's a single disappointment or a sudden disappointment, a shift in the growth, then you have to be ready to change stance and protect yourself and cut loss. That's if you're a trader. But if you're an investor, of course, that's a totally different scenario. Also, the good thing is we can still see leaders holding up here. Like Wilcon, I think this is one of the stocks of the year. One of the cleanest trends. If you were patient enough to buy the breakout here, then this is a very, very basic trend. Easy money. But of course, it's easy on the hindsight. But on the actual, it's more challenging. So these are some of the names that are stable. But at 17 a share, I wouldn't say it's super attractive at this point. But what's interesting is it's still resilient. Okay, but valuation wise, probably I think upside is a bit limited. Not sure. So let's just see if it breaks out again above 17. So another outlier of the year is House. So even though we saw a big correction candle here, at the end of the day, it's still closed above 14. So it's still creating a new base, though again, this is just like Wilcon. This is also at the latter stages of the move. So I'm not too keen on jumping here, not unless you're really a pure momentum trader and you know what's in the company for the future. Then maybe you could assess those factors. So there. Okay, guys, that's our That's our PSEi market insight for this week. So moving forward, the best approach is to be cautious. Don't be complacent. We're in a sell-on rally up market. That it's not a bullish trending market. Okay, so this means that if ever we jump to critical resistance levels such as 7,800 to 8,000, the previous levels where we had a hard time, then you can take these opportunities to trim down. So for me personally, I'll show you my current holdings. I won't show the names, but just the description of what I'm trading. So I'm starting to try to pick up some names that are trying to create special moves or breakouts. So that's stock number 1. These are previously battered names, but they're behaving quite interestingly in the past few 20 days. So I'm trying to accumulate this stock number 1. Stock number 2 is a no-brainer pick for me. I've been holding this for quite some time, so I'm just following the trend here. Then stock number 3 is one of the stocks that I've sold recently when I had 2 stocks left. So this is one of the top performers of the year. I'm just buying on the dip and looking to capitalize on a short-term bounce if it becomes awake again. Then stock number 4, related to number 1, and it's also one of the quite battered names in the market, but there may be some attention to it given that we're finished in the election, and there may be certain advantages of these companies after the election, after seeing the results of the election. Okay, so but mainly those are just minor information. What I'm trying to really look at is, would these stocks fit my technical parameters or my system? So I think that's the most important thing. Okay, so totally I'm less than 50% exposed, meaning this is just lightweight trading. At any point in time, I can trim down my position, bring this back to less than 30, less than 20%. That's almost good as pure cash. Okay, so that's how cautious I am as of the moment. All right. So there. If you like our videos, please subscribe to our YouTube channel. Here you can check out. This is the Investagrams channel. So if you like what we do, if you like our content, please subscribe and share to your friends so that we could spread out the learning to more people, guide more people towards their financial journey. And at the same time, if you want to enroll in formal courses, you can check out Investalearn here on our app tab. So Investalearn is our online learning platform where you can enroll into courses. So bulk of the content here is free, whether stock analysis or technical analysis fundamentals, and we're working hard to bring in more content here. And also, if you want to check out our premium content and premium videos, you can learn a lot in our previous events here. And you can take on the video on demand. Like, for example, in the past Investagrams Trader Summit 2018. So even if you weren't able to attend, you can keep on watching it and learn from different topics such as end-of-day trading, forex trading, then building your journey as a trader, mastering yourself, then bottom picking, one of the most tough but probably rewarding aspects, and then trading hacks. This is by Sir Spyfrat on his Bebemon setup and system. Okay, and then copy trading. Then my talk on technical analysis and fundamentals, how I merge the two worlds to outperform in the market. And then power of valuation. So all of these are already a good addition to your foundation. You can see the wide scope here, from technical trading, EOD trading, incorporating fundamentals, to having your own momentum setup. So I think this is a very holistic way to start. Okay, so thank you so much for watching this video. See you again in the coming weeks. We're gonna launch a lot of things in Investagrams. I hope that we get your support, and I hope that the features and content that we do really help you in your journey. So if ever you want us to talk about future topics, feel free to comment below on what other topics or learning discussions could we focus on the trading journey, or what aspect of the stock market or trading do you want us to discuss further, and we'll do our best to see what we can do about it. Okay, so thank you again for watching. See you again soon.